patterns based on two parameters. 1. Impact of the pattern. 2. Repeated occurrence of the pattern. Because if a candlestick pattern has less impact, then it is not useful. Similarly, if a candlestick pattern is powerful, but if it rarely occurs, then again, it is of no use, is it? Considering these two parameters, below are some powerful patterns that occur very frequently on all the time frames. Bullish engulfing. Engulfing candles tend to signal a reversal of the current trend/swing in the market. It involves two candles, with the latter candle engulfing the previous candle's entire body. In the bullish engulfing pattern, the first candle will be a small bearish candle. The second candle opens below the first bearish candle, trades lower than the bearish candle, but due to the entry of powerful bulls, it will witness a close above the bearish candle. Hence, it engulfs the first bearish candle. It is bullish in nature. Image 4.2 and 4.3 are examples of bullish engulfing. The price is in downtrend/swing, and the bullish engulfing pattern appeared at the support trend line. The price rallied on the upside after displaying the bullish engulfing pattern. Bearish engulfing candles tend to signal a reversal of the current trend/swing in the market. It involves two candles, with the latter candle engulfing the previous candle's entire body. In the bearish engulfing pattern, the first candle will be a small bullish candle. The second candle opens above the first bullish candle, trades higher than the bullish candle. Still, due to the entry of powerful sellers, it will witness a close below the bullish candle. Hence, it engulfs the first bullish candle. It is bearish in nature. Images 4.5 and 4.6 are examples of bearish engulfing. The price was in an uptrend/swing, and the bearish engulfing pattern appeared at the resistance trend line. The price fell after forming the bearish engulfing pattern. Hammer pattern. When a stock price trades significantly lower than the open price, it bounces back due to the sudden entry of bulls. It closes a little below or above the open price, which results in the hammer pattern. If it occurs at a critical support level, then there is a high probability of reversal in the price chart. Images 4.7 and 4.8 are examples of a hammer pattern. It derived its name as the shape looks like a hammer. In this pattern, the lower shadow is at least twice the size of the real body. Hanging man pattern. It looks similar to the hammer pattern. It occurs at the end of the uptrend and resembles a hanging man from the top. Hence, it gets its name. It indicates the potential reversal of the price from the uptrend. If it occurs at a critical resistance level, then there is a high probability of reversal in the price. Images 4.9 and 4.10 display a hanging man pattern. In image 4.9, the price was in an uptrend, and the price displayed the hanging man precisely at the resistance line. In image 4.10, the trend was down, but the hanging man appeared at the upswing within the downtrend. It indicates that the buyers have lost their strength to push the price to the upside. Hence, there is a higher probability of price reversing from that level. Harami pattern. Like engulfing, we have two harami patterns. 1. Bullish harami, and 2. Bearish harami. The word harami means a pregnant lady in the Japanese language. This pattern appears like a pregnant lady, and hence it got this name. Bullish harami includes a big, bearish candle first, followed by a small bullish candle in the middle. It indicates that the selling is over, and there is a high probability of the price going upward. Bearish harami includes a big bullish candle first, followed by a small bearish candle in the middle. It indicates that the buying is over, and there is a high probability of price going in the downside direction. The images 4.12 and 4.13 show examples for bullish harami and bearish harami pattern respectively. Morningstar pattern. A Morningstar pattern consists of 3 candlesticks, which occur in a downtrend and often indicate the beginning of the uptrend. It consists of 1, 2, 3 formation in a downtrend, indicating the sign of a change in the trend. The first candle is bearish, and the second candle indicates indecision, and the third candle indicates the bullish behavior of the price. Evening star pattern. It is similar to Morningstar, but in the opposite direction. Again, this pattern consists of 3 candlesticks that occur in an uptrend and indicate the beginning of the downtrend. Similar to Morningstar, this pattern also consists of a 1, 2, 3 formation, but in the opposite direction. It indicates sign of a downtrend. The first candle is bullish, the second candle indicates indecision, and the third candle indicates the bearish behavior of the price. Doji pattern. In a doji pattern, the open and closed prices will be nearly equal for the selected time period. It is a neutral pattern that indicates indecision. The above image shows different variations of doji. In all 3 types, the price closed at the open level. However, based on the location of open/close, it is possible to identify the sentiment behind it. In gravestone doji, the open and price level will be at the bottom. It indicates that buyers attempted to push the price upside in this period, but they lacked the power to drive the price upside. Hence, it closed at the same open level. We can expect only a downside move until the price negates this pattern. In Dragonfly Doji, the situation is precisely the opposite. In this case, sellers tried to push the price downside, but they failed, and hence price closed at the top. Therefore, we can expect only an upside move until the price negates this pattern. In normal Doji, also called long-legged Doji, there is not much clarity in the price business. Besides, it also indicates the equal fight between buyers and sellers. Hence, it shows perfect indecision. It's always better to wait for the next candle completion if we get a normal Doji. Pin bar patterns. A pin bar consists of 1 candlestick bar, and it represents a strong reversal and rejection of the price. Usually, pin bars have a smaller body and a long tail. Again, this pattern has 2 types. 1. Bullish pin bars, and 2. Bearish pin bars. Bullish pin bars are similar to the hammer pattern. In both types of pin bars, the color of the body doesn't matter much. A longer tail is crucial, as it shows the rejection of prices at key levels. The above image shows an example of a bearish pin bar at the resistance trend line. It indicates the explicit rejection of the price to trade above the resistance trend line. After this point, the price didn't show any signs of recovery, and displayed a significant fall. How to use these candlestick patterns. Traders should not use these candlestick patterns independently to take trades. These patterns should only be used at predetermined key price levels, either support or resistance. Besides, don't take the trade before the completion of the pattern. For example, if you are using a 1-hour time frame, and after 30 to 45 minutes, if it is looking like any of the above mentioned candlestick patterns, don't opt for the trade immediately, because pattern might negate or change in the remaining time. It's always better to plan a trade after the completion of the candlestick pattern. It's always better to finalize a trading system and then to apply these candlestick patterns. Otherwise, a trader loses control of trading and ends up with many losing trades every day. End of chapter 4. Chapter 5. Price action trading strategies. Do you know why the racing horse's eyes are covered with blinkers or blinders? These blinders are made up of leather or plastic. These are placed on both sides of the horse. It reduces the angle of the horse's vision by over 75%. But still, all the riders, especially in the races, use it. Are they crazy? The reason is pretty simple and straightforward. Horses have eyes at the sides of their face, which means they have peripheral vision. It can easily provoke the horse to run in any direction unless they are made to remain focused. When the riders attach blinders, it will cover the side angle vision and focus ahead. With this device's help, racing horses concentrate better on the target, and they can run with astonishing speed. The same logic applies to all traders. We have many trading types, such as swing trading, positional trading, trend following, etc. If I stop at this point, traders will take trades in all possible trading styles and lose money. So I will cover a few critical trading styles. And you can pick any one trading style which suits your personality. Please note, there is no need to implement all of them in your trading. Swing trading. Swing trading is a trading technique that seeks to capture a full swing when the price goes to a complete sideways zone. The idea is to get out of the trade before the opposing pressure comes in. It means you look to book your profits before the market reverses. Identify a range-bound stock or index as the first step. For a long trade, look for bullish candlestick patterns such as bullish engulfing, bullish harami, hammer, morningstar. If you see the price confirmation, opt for a long trade above the chart pattern's high, keeping a stop loss below the low of the chart pattern. You can aim for the next resistance line as your target. Plan the trade only if the risk-reward is greater than 1 to 2. Image 5.3 and Image 5.4 are examples for long trades in swing trading using candlestick patterns. In both cases, the price is in a sideways trend. There was a good support trend line, and the price displayed candlestick confirmation, hammer in 5.3, and bullish harami in 5.4. Hence, a long trade can be planned above the high of the confirmation candle, keeping a stop loss below the confirmation candle's low. The target will be the next resistance zone, as highlighted in the image. For a short trade, look for bearish candlestick patterns, such as bearish engulfing, bearish harami, hanging man, evening star, pin bar. If you see the price confirmation, opt for a short trade below the chart pattern's low, keeping a stop loss above the high of the chart pattern. You can aim for the next support line as your target. Plan the trade only if the risk reward is greater than 1 to 2. Image 5.5 and Image 5.6 are examples of short trades in swing trading using candlestick patterns. In both cases, the price is in a sideways trend. There was a good resistance trend line, and the price displayed candlestick confirmation, pin bar plus bearish harami in 5.5 and bearish engulfing in 5.6. Hence, a short trade can be planned below the low of the confirmation candle, keeping a stop loss above the confirmation candle's high. The target will be the next support zone, as highlighted in the images. Trend following. In this system, trend plays a crucial role, as all the trades will come in the direction of the trend. For long trades, the prior trend should be on the upside. If the price shows healthy correction and a candlestick pattern, one can plan a long trade. For short trades, the prior trend should be down. If the price shows a bounce and a candlestick pattern, one can plan a short trade. Rules for long trades. 1. Price should be in a clear uptrend. 2. Healthy pullback. 3. Price should display a bullish candlestick pattern at the support line. 4. Risk reward should be a minimum of 1 to 1.5. Images 5.7 and 5.8 are simple examples for long trades using the trend following technique. In both the cases, the prior trend is up, there was a healthy pullback, and candlestick confirmation occurred exactly at the support trend line, hammer in 5.7 and bullish engulfing in 5.8. A trader can plan a long trade above the high of the confirmation candle, keeping a stop loss below the low of the confirmation candle. The previous swing high is the safe target, as the primary trend is up. Hence, we can plan to exit 50 to 75% of the position at the target, and carry the remaining position by trailing stop loss below every swing low. Trailing stop loss is the most critical aspect of the trend following system, as you never know where the trend will stop. In fact, it is the core logic in this trading approach. Sometimes, profits in one trade, using trailing stop loss, can absorb the loss of many failed trades. Rules for short trades. 1. Price should be in a clear downtrend. 2. Healthy bounce. 3. Price should display a bearish candlestick pattern at the resistance line. 4. Risk reward should be a minimum of 1 to 1.5. Images 5.9 and 5.10 are the simple examples for short trades under the trend following technique. In both cases, the prior trend is down, there was a healthy bounce, and candlestick confirmation exactly at the resistance trend line, bearish engulfing in 5.9 and pin bar in 5.10. A trader can plan a short trade below the low of the confirmation candle, keeping a stop loss above the high of the confirmation candle. The previous swing low is the safe target, as the primary trend is down. Hence, we can plan to exit 50 to 75% of the position at the target, and carry the remaining position by trailing stop loss above every swing high. Swing trading and trend following are the two simple trading systems, and we can apply price action strategies directly in them. If you are a beginner or an intermediate level trader, mastering any one of these strategies is more than enough to taste success in trading. The next chapter contains some advanced trading topics, and a few trading systems based on those concepts. Again, feel free to skip it if you are a beginner, and go to chapter 7 directly. Breakout trading. A breakout trade opportunity is nothing but a stock price moving outside a defined resistance level with increased volume. A breakout trader enters a long position after the price breaks above the resistance level, keeping a stop loss below the resistance. In this process, they either trail their stop losses or target to exit at higher levels to make profits. I have written a detailed book, How to Make Money with Breakout Trading, on this topic. Please read this book to know more about breakout trading. End of chapter 5. Chapter 6. Price acceptance and price rejection. Irrespective of your reputation, experience, and educational qualifications, only two things decide the fate of your trade. 1. Entry, and 2. exit. Everything else doesn't matter, or the market doesn't care about any other aspect except your entry and exit. Hence, it is better to have a deep understanding of the price to get success. Price rejection. Image 6.1a shows a support box in the USD/INR chart, and the price has reached the support box. If the smart money, big people who already invested, still have a bullish view, what do? They pitch in and buy in large quantities. Otherwise, if they are not bullish, buying will not come. Isn't it? Let's see what happened in the next candle. Now carefully observe what happened the next day. The price broke the lower levels of the support box. If the smart money is bullish, or keen to accumulate this, it is a wonderful opportunity for them. Hence, they entered with large quantity, and their size displayed as the rejection of the break of the support. It is called price rejections. Once the price shows clear rejection from the smart money, there is a higher probability of the support box acting as support. Hence, traders can plan a long trade above the rejection candle, or at the upper line of the support box if you are looking for a safer trade, keeping a stop loss below the rejection candle. The low image shows the result. Price acceptance. The above image shows CEAT limited daily chart. There is a clear resistance trend line, and it looks like the price is taking resistance at the moment. But if you observe, one can identify two things. This is the beauty of price action trading. 1. Rejection candle is not strong. Too strong buying is witnessed in all the previous swings. If the sellers are powerful, they have to take the price below the strong buying level, isn't it? Image 6.5 shows what happened next few days. Sellers were clearly struggling to push the price downside. In image 6.6, the failure of sellers is clearly visible. Besides, buyers' dominance pushed the price above the resistance trend line and witnessed a strong close. It is called price acceptance. Do you think now is it still a good idea to think resistance line acts as resistance? I hope your answer is no. We can then plan a long trade above the high of the accepted candle, keeping a stop loss below the accepted candle. This has every probability of success, isn't it? You can see the result in image 6.7. Case study 1 USD/INR. Case study 1 shows the USD/INR daily chart. There is a good resistance trend line. The price traded below the trend line for over a month, but sellers' power is not enough to push the price to the downside, as it failed to make lower lows. And also, strong buying can be witnessed at every swing low, highlighted as A in the image. Besides, the price is trying to trade above the resistance trend line. It is a beautiful opportunity for sellers, if they are keen, to load their short positions, but their activity is so small that it created only 2 small pin bars. It indicates a higher probability of price trading above the resistance trend line, which means the resistance line will not hold. However, we should not plan a long trade at this point. We need to wait for the entry of bulls, or the complete negation of sellers. Image 6.9 shows the same chart after 1 day of trading activity. It is evident that sellers failed to push the price downside. Besides, buyers also entered and negated all the selling, highlighted as C. It also supports our previous assumption. Hence, it is better to plan a long trade above the green candle's high, keeping a stop loss below the low of the green candle. This trade has a high probability of success. As I said earlier, only entry and exit decide the fate of your trade. At the moment, I am focusing on entry. I will also provide a detailed explanation of exit in the subsequent case studies. Every trader can follow a straightforward exit strategy to book profits for 50% of the position at 1 to 2 risk reward and carry the rest with a trail SL concept. Below swing low for long trades and above the swing high for short trades. Case study 2, Platinum Futures. Image 6.11 shows the daily chart of Platinum Futures. It has a good support trend line. The price is near the support line, and the question is whether it will hold or not. If you observe, the price failed to make higher highs, and the selling is strong at the swing highs. We should not short at this moment, as the script witnessed some buying due to small buying wick. We can plan a short trade once the price negates the selling. Image 6.12 provides the same chart, but after a few days of trading activity. It is evident that buyers struggled a lot to push the price to the upside. Consolidation. Besides, there is a significant bearish candle, bearish engulfing, at the end, the last nail in the bull's coffin. It indicates price acceptance. It means there is a higher probability of price going downside, isn't it? So we can plan a short trade below the low of the big bearish candle, or below the trend line for safe trade, keeping a stop loss above the high of the bearish candle. Image 6.13 shows the result of this trade, and it conveys everything. In this case, there are no good reference points to manage exit. Hence, a trader can exit 50% for 1 to 2 risk reward and carry the rest with the trail stop loss concept. Case study 3-TCS. The above image is a daily chart of TCS. Price is moving in a clear sideways channel. In the end, buyers tried to push the price to the upside, but they failed miserably due to the sudden entry of sellers above the resistance zone. In this candle, approx 50% of the daily range is a selling wick. It indicates that buyers lack the firepower to fight with sellers. Instead of taking a short trade, we can wait for one more candle to see who is more powerful. If you look at image 6.15, the next candle is dominated by sellers. There was an open high, and then the fall sustained for the entire day. Besides, the price failed to trade above the resistance line and high of the previous candle. It confirms the presence of a robust selling force. Hence, we can plan a short trade below the low of the selling candle, keeping a stop loss above the selling wick or the resistance trend line. We can aim for the support trend line as our target. Image 6.16 shows the result of the trade. The price has reached our target of the support trend line. I suggest exiting the trade at this moment. Can you think of a reason? The answer is simple. There is a rejection candle with a big buying wick at the support line. So, instead of taking a risk, it is better to book the profit. I am not saying it will go entirely upside from here, but there is a possibility of a slight bounce after seeing the rejection candle, and we are not sure to what level it will bounce. Hence, it is better to exit the trade. If you are a risky trader, you can exit 50 to 75% of the position at the support line and carry the remaining position with the entry price as your stop loss. In this way, even if the price hits your stop loss for the small position, you end up making money for the large quantity. Case study, 4 Nifty 15-minute chart. The same price action concepts work very well, even in intraday or shorter time frames, but traders forget or ignore one crucial aspect when it comes to intraday trading or short-term trading. Whenever we get into a lower time frame, opportunities increase. So does the risk and noise. So our money management rules should be designed to prevent erosion of our capital, even if we get a few successive failed trades. Image 6.17 shows a Nifty 15-minute chart. Below points are very clear from the chart. Buyers are struggling to push the price upside. Sellers are dominant, big red candles, in the channel. Buyers failed to push the price above the resistance trend line. Price showed acceptance close to the support trend line. All these points indicate that there is a higher probability of price breaking the support trend line. We can either plan a short trade below the last red candle or wait for completion of one more candle. Please note that in intraday trading, due to waiting, we may miss good opportunities. Image 6.18 shows the same chart after the completion of another 15-minute candle. It is clear that sellers are in complete control. If you have already taken the trade, you are already in profit. If not, you can plan a short trade below the low of the last red candle, keeping a stop loss above the high of the red candle, or above the support line. We can aim for the previous swing low, 13,455, as our target. Image 6.19 shows the result of the trade, and it doesn't need any explanation. Case study 5 Bank Nifty 5-min chart. Image 6.20 presents an interesting scenario with a 5-minute chart of Bank Nifty. Bank Nifty showed a gap down open from the previous day lows. However, it failed to extend on the downside. It started to make higher lows successively. However, strong selling can be witnessed in the 3 candles with large upper wicks below the resistance trend line. As shown in the image, at this moment, it is an equal fight between buyers and sellers. All the sellers have kept their stop loss above the day's highs. Similarly, all the buyers have kept their stop loss below the day's low. Image 6.21 shows the same chart, but after completion of 3 candles. These 3 candles displayed acceptance of the price at the resistance trend line. The last candle also traded above the day's high, which means all the sellers should run to cover their positions. It also indicates a trend day possibility with an upside range extension. Both trend day and range extension are market profile concepts. Market profile is highly beneficial for intraday traders and short-term traders. To know more about market profile, read this article. Hence, a trader can plan a long trade above the breakout candle.
Every per trade you lose, that's not correct.
That's not correct.
Haters gonna hate. I have one question. I blow almost 90 accounts, $500 to $600 close to passing my account. I funded account, 20 account. What is your advice? Should I stop? Andrew, no. Too big of size. You need to size down. Size down. Micros. You should. Yeah, I told my VIP team almost every single week. You should not be blowing accounts. Every single account you trade, if it's an evaluation account, should last minimum 1 month. Minimum 1 month. That's it. Have you checked the news? Wild trades, yeah, it's math, man. Math is hard. Averages are one thing. You could say the market averages something. Oh, oh, you know what this reminds me of, everyone? It's like there's a comedian. There's a comedian, and he does it like funny statistics, and some of his content is great, where he uses statistics and he jokes around with it. Obviously, comedian, and he shows how politicians skew statistics all the time, which is just abnormal. Like it's funny. I should probably find it. Let's see. Oh, there we go. Don McMillan. Don McMillan. Go look at Don McMillan. Where you could take. Yeah, I can't post it on here, right? Because of copyright and anything. But it's true, right? We're traders. We look at traders. Right, and some of it is skewed. And some of it's a joke, right? And it's the way that traders look at it. They take one statistic and they skew it in whichever way makes it like. Look at this. You cannot understand if traders are looking at one statistic you have to take the whole picture, right? There's expectancy, there's risk reward, there's win percentage. But look at this. This is one of those jokes, right? There's 1.4 billion people in China. There are 7 billion people on Earth. Hence, 1 out of 5 babies born on Earth are Chinese. Conclusion: if you've got 4 kids and you're expecting a 5th, it will be Chinese. There's statistics that are joke. It's true. It's like a trader saying, I'm the best trader in the world because I have a 90% win rate. Well, that 10%, you blow your account. I see traders do it all the time, and vice versa. You just never know. You have to take all the statistics. You have to take the whole big picture. You look at stats all the time and say, hey, let's look at the stats. Let's maybe look at my slow markets performance that I've been trading in front of everybody, just this, right? And you have to take the stats in overall when it comes to evaluating your personal trading, because that's what it's about. How are you trading? How's your statistics? How do I become better? What do I need to improve on? Which ones do I need to focus? Well, it's wrong for you only to focus on your win percentage. It's wrong for you to only focus on your risk reward. What should you focus on as a trader? And my answer is going to be the same. It depends on you. It depends on how you are trading. It depends on where you're struggling with. It really depends on so much, right? Look at this. You could look at this and say, this is horrible. If you look and if you hyper focus on just this, you can say that, wow, you are a horrible trader. Your best trade is only $1,200. Your worst trade is $1,400. You must be a bad trader, right? You're a bad trader. Well, I don't know. Or how about this one? This is a statistic. Trade direction. Wow, you only buy the market. You must have blown your account many times in this. Market's been bearish. You must have blown your... No, actually, I've been making money because it's about trade location. That kind of shows you my bias, though, right? I obviously, it's easier for me to buy the markets than sell markets. But yeah, 74 trades have been bullish, then 9 trades been bearish. And over the period of the past couple weeks, it's profitable here in slow markets. And so, or this one, best 8% of totals, and you could take anything, but you have to understand, you have to evaluate everything as a whole to become better. Yeah, the big picture, right? The big picture. And markets, that's gold. This is gold. Let's take a look at it. Nasdaq. Mine's the opposite. I like selling. It feels better for me. Yeah, there's nothing wrong with that. Malo Tick, are you going to have a call with Peter Brandt? Well, maybe. Maybe. We shall see. Hopefully. How big is my drawdown this year? Well, it was over 40,000. Ooh, or you know what you could do? Here, instead of coming in here and asking me these questions, I got something. I got something. If you really are so interested, if you're so interested in me and my individual trading and not interested in you and your trading, there's my Twitter. If you want to follow me and watch it and see every little detail, I usually post some stuff in there. I'm still trying to figure out why you sold at support. What do you mean, Matthew Justice? You're trying to figure out why I sold.
Order filled.
At support. Please let me know what you mean. I'm curious on that one.
Order filled.
About tonight, yesterday, what support, when. Hey, Coach, can you talk about YM a bit? Never hear much. I don't talk about that very much. Earlier as in today, like that. Okay, you want me to walk through this trade tonight? Okay, you know, that's a fair question. Let's look at this. Let's look at this. Bear flag, bear flag. You sold preemptive break of support. Correct. Yeah, so if anybody didn't know, let's talk about this trade. Good. Thank you, Matthew. Let's get back on topic. Let's start talking about this specific trade. Why did I do exactly what I did? That's my live account, right? So micros, number one. So when I came on here, I did that brief analysis. You've seen me do that. I talked about the higher time frame. I talked about everything. I talked about, you know, selling off. Like we're selling off. And then I zoomed into a 5-minute and briefly looked at the 5-minute, and we're consolidating right here. You can see that there was a level of support at like these 240s. We broke down and we consolidated there. And one thing is we tried to break back above it and rejected. We broke back above it and rejected. And so, you know, we're still holding below that level. And then I think I had the 1 minute up. And you've seen we rejected, rallied, rejected again. And so I was playing a breakout trade, right? Because you can see it happened before. See what happened here. See what happened here. We consolidate and then we broke down. Consolidate, we broke down. Consolidate, we broke down. Consolidate, broke down, right? So we don't know what was going to happen. That's why we trade. We put money at risk with a process, believing that it could go in a direction,
filled.
right? So based off of how we were trading tonight, consolidate, break down, you know, and people use these words all the time. Is it a consolidation, right? Expansion, contraction, right? This is, I've also heard traders say this: we contract, we consolidate, then we expand. Consolidate, contract, expand. And you could say that. So that's what we were doing. And so as we started to sell, I had this 100 tick chart over here on the right hand side. And you could see it was pretty clear. I started entering into a short here. And then I added, you see me, I was adding micros. So I added, I don't know how many micros I got into, I think 4. As we started breaking down, and then we just broke down. And I took profits. I wasn't expecting that huge of a move, but I was fine with just watching the momentum and closing, you know, taking profits on the way in.
Order filled.
Right down. Okay. Let's go. Yep, thanks, Rizzy. Sell. Gold bull flag popped. Gold's breaking out. Yes, it is. Gold's going straight up. Gold to the moon. It's going up. It's breaking out.
Order
Nasdaq,
filled.
You know, maybe it's the same thing here in the Nasdaq. Are we going to consolidate and then break down?
Order filled.
Maybe. It looks like so far we tested this area that we held. This was support. So far, this support's becoming resistance, and maybe we do get another move and a leg lower. Maybe we could find either we bounce up or we can
order filled.
I'm not sure. We'll see. Told you yesterday, gold to the moon. Hopefully you traded it and took advantage of your tail.
Order filled.
Could you explain what makes markets so volatile? More volume.
Order
yes,
filled.
More volume, but less volatile. It's not necessarily volume that makes markets volatile. You could argue less volume can bring volatility, but I don't think it's about. I think it's a mix of some things, right? Liquidity.
Order filled.
So if we look at what makes these markets volatile, look at the DOM. This is a DOM. See how it's like 2s and 3s and 4s on the bid and ask? Right?
Order filled.
To the Nasdaq.
Order
The
filled.
minis. Look at the spread. Wow. Like that spread is. Who wants to trade the minis? Like that is a 4 or 5 point spread.
Order filled.
1s and 2s. And so when you buy market, sell market, we're moving. It's very fast. There's very, very
Order
little
filled.
liquidity. There's very, very little orders on the, like, look at that 2, 1, 1. There's nothing there. And so this market moves very easily. It's like very liquid, very free flowing in terms of it doesn't take much You buy 10 contracts, and you could push this up 5 points. I could, my own account right here, I could buy 15 at market, and I could push the Nasdaq up like 10 points, right? That's what it looks like. If I buy market 15 contracts in my live account, I will myself, one trader, can push this market up. It looks like 10 points or so, which is insane. That's crazy. That really is crazy. But then if we take a look at the ES,
Order filled.
it's going to take
Order
a lot
filled.
more, right? I'm not going to be able to push this market up so much with 15 points. See, there's 25, there's 5, there's 7. So it's a little bit better. It's a little bit better. Does that make sense? Let's pump the Nasdaq together. Not an ass spread. I'll be instantly down like $1,000, like $2,000.
Order filled.
Doing that. Look at the orders. 140. Look at the sellers coming in. Man, if that doesn't show you how many people just want to sell this market. Oh, that could have been a good selling opportunity here in the Nasdaq. Selling up here. Buy it for educational purposes only? Yeah, let me just throw away a couple $1,000s for educational purposes.
Order filled.
Nothing makes sense today. Just selling the pops. Yes, that's what it looks. That describes today perfectly. Slam it with 20 contracts. If I had the keys for the house account, I would build a position in my personal. Then I'll slam it with the house accounts contracts. I'll just I'm gonna build my personal
Order filled.
position. And then as soon as I finish building my position with my personal account, I'll switch to the house account and just market 100. Nothing wrong with that. College students throw away thousands for education. Nice pullback on gold. If the
Order
spread in
filled.
Nasdaq is so high and it's difficult to make profit, who's trading now at this time? Institutions, maybe algorithms, some retail traders, speculators. I mean, it's a little scary, but we are finding some support. Like, look at these buyers stepping in now. Did we bottom? Did we bottom for the slow market session at temporary? Is it temporary from this New York session pivot right here? It's looking like it. We came down and we tested this pivot, and now we're starting to find some buyers. So seeing some buyers stepping in.
Order filled.
Short-term buying? Is it just temporary? Or did we reverse? Can we see some more momentum? We did break the downtrend, the current downtrend anyway, that we have been seeing tonight. We broke it. Not only did we, yeah, so maybe. Dakota, are market makers still involved in these market conditions in order to execute directly on the exchange? And buyers, market makers are always, and that's what makes they help make the market. That's what a move. That's a move right there. That is 200 points. 200 points tonight. Up, 200 points down.
And this cut comes without foreign countries.
Coach, what would you consider an order block and a breaker block?
The Treasury Secretary
Can
came
you
out to
explain
promise the world
it
today and the markets
in
that there is
both
a ceiling now.
trend
So the course
down?
may be over, and this
Probably
ceiling
wouldn't be the
is
best
something that
Ninja
means the
Hyper.
flavor
Order
standard
filled.
according to the Trump White
Maybe
House will
Coach
not
J
get worse,
is a
at
lot
least for
more
everyone but China. That's the
experienced
summary.
trading
Now we're
order
going to get to the
block and
details, and
breaker
I'm
block.
actually about to show you how this played across Wall Street and across politics today. But let's just start, as we try to do around here, with the core evidence. And I have three things we can see clearly. One, Trump's tariffs are partly paused now, and that is designed to calm markets, and it is calming markets. They also, though, continue at 10% rates, which is widely viewed as a fairly unsustainable.
Order filled.
The market panic that we saw did melt into this huge rebound, and many are eager to believe that Trump's new line is somehow sturdier than his past claims. So we saw the rebound today of people saying, let's take the good news more seriously than some of the uncertainty and the bad news in the markets. And finally, in this summary, 3, Donald Trump backs down. That is the clear fact of it. That's the New York Times headline. That's what Wall Street likes. Unlike Tom Petty, who's saying, I won't back down, I won't be turned around, Trump did back down today. Unlike 50 Cent, who memorably rapped, it's easy to see when you look at me. If you look closely, 50 don't back down.
Order
Well,
filled.
it's one thing Trump does not have in common with them. Trump do back down, if you will. All right, with those 3 clear points in mind that are not really in dispute here, in reality,
Order filled.
let's now look at how all this went down.
There will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff.
Things can change rapidly. Markets have just been so volatile in recent days. You almost can't look away because you might miss a 1% move in either direction. But this was driven by the strategy. He and I had a long talk on Sunday, and this was his strategy all along.
It's obviously a relief rally.
Order filled.
More than 75 countries contact us, and I imagine after today there will be more.
Are the numbers
Order
that seem
filled.
correct here for the Dow? Are we 840 points right now? Dad, I'm watching this literally glitching, and we're up 900 points. Is this yeah, okay. There.
Because you don't care. Right? You switch to
Is this real? Wow. And those are the people in our sister network, CNBC, but among other financial journalists, the people who track this for a living and are still like, whoa, how did that much capital come flooding back into the markets? So that is a good thing that comes after a larger bad thing that is not over. All of this Trump-induced, much of it feeding uncertainty. Ordinary Americans are still going to be paying what everyone has been calling this Trump tax because at least under the new announcement, there's still a large tariff in play. Could amount to thousands of dollars a year, depending on what you buy. Trump is backing down. He's still claiming to do the 10% tariff, which raises prices. And it's been an interesting week, and a costly one thanks to Trump policies, but most experts and participants view this as a self-induced American economic disaster, without much clear upside other than someone who took so much money out that when it came flooding back, they can say, look, it's not as bad as the thing we started. Some are also clamoring to try to help Donald Trump get into a place where he continues to back down and give the whole thing up. Some claim this was a strategy or that he won something in the hopes of maybe trying to flatter him into a less embarrassing off-ramp to get us all past this. But factually, when it comes to trade policy, even before you get to China, this thing isn't over right now. The current reduced tariffs carry some of the same risks that we've heard experts and MAGA allies and billionaire hedge fund managers all deride over the past week, albeit at a lower volume. I told you I'd get into the details. Well, consider how it was reported just last week when the tariffs first went into effect and we were looking at the 10% tariff. So we've deliberately showed you a slightly older headline. This is Reuters or The Guardian, referring to what is today's reality, a 10% tariff, smashing global trade norms, a seismic shift to global trade, a big bad deal at 10%. So Donald Trump has done something that many people try to do in politics or sales. They sometimes call it the anchoring effect. If I scare you at 20% and bring it down to 10, it feels like a relief. If you started out at 0 or 2 and jump up to 10, you go, oh my gosh. And so we don't know what the markets will do any more than we know what Donald Trump will do. But very recently, the experts viewed 10% as a problem. Now that's the reduced norm. Markets relieved about that. But there is still far higher uncertainty about U.S. trade policy, about U.S. credit, even about the full faith and credit of the United States and the Treasury markets and all that stuff and details if you want to get into it, because we're still in the middle of Trump backing off, but not ending his self-induced risky tariff trade war.
Well, let's be clear what happened. Who capitulated here and why? And, I don't want to say this because I'm a patriot. I'm an American. But it is the White House who capitulated. He did everything right to the end. He did right. Well, yeah, you can look at it that way, or you can look at it, the gun was at his head. What happened last night was very bad.
So it feels a little bit of a relief here, but I have to say 10% tariff is still a massive reordering of U.S. trade and global trade, and certainly is not an eradication of the risks that we had seen in the past week.
Let me clarify something here. This is a long way from fully backing off. This still leaves the United States as the most tariff-heavy industrialized country in the world.
Order filled.
It's not even close.
He has permanently injected that uncertainty into markets. You can't really put the tariff threat toothpaste back in the tube.
I think it's the reason the question of why are other countries going to deepen their ties with us after we punch them in the face?
All of this, a reflection of a policy that was such a failure after saying they weren't going to lower tariffs, they weren't backing down, they weren't open negotiations, and they fought each other about that. They've backed down but left these tariffs in place. And the voices we just showed you, you might notice, are a little different from when we're covering legislation, and we see a lot of politicians. Those were financial experts, financial journalists, people tapped into that world saying this is still a huge problem. Now, Trump is saying other countries have been reaching out to make deals. Well, of course, they're going to reach out when you look at this kind of situation. Trump was also very clearly rattled through the reporting by how things could get far worse than the drops I showed you leading into this morning.
That's been the VIP conversation. Anybody my VIP in here can confirm it's been size down. This is a marathon, not a sprint. If you don't size down and start trading micros, if you're struggling, then the market will force you, and you're going to end up taking losses. You're going to blow accounts until you adjust. That's as close to a guarantee as I could get. Is I see traders continue to blow accounts and continue to lose money and struggle until they finally realize, wow, you were right. As soon as I traded 1, 2, 3 micros, I started trading better. Yeah. I've been struggling too. And everyone sees me trading. I'm trading micros. Micros. My typical size, sometimes I'll be 5 minis, 10 minis.
Order filled.
Been trading micros. And every once in a while, depending on the setup, a couple minis, 1 or 2 minis, which is still small compared to what I normally
Order filled.
And then you compare last year, I was up to 30 minis. I was trading 30 minis for a good portion of the summer. Coda, can you tell us what you're getting for the new $30 fee? What's that, volume? What is that? Volume for the $30 fee? I'm up 1K.
Order filled.
What was your risk? $5 a day, 10-year, way different market conditions, 30 minis. Yeah. The market conditions were not this volatile. I would not be in 30 minis.
Order filled.
Yeah, when the market goes back to normal, we're gonna miss this. We're gonna be missing
Order filled.
volatility as we are going to 300. We're breaking through those 300s. Next step, 320s maybe. As I said, 18304.
Order filled.
Wow. Do we go back to break even today? Do we go back to green? Do we make a run all the way back up here? 10 points a day, that's all you need, honestly. The power that comes with averaging 10 points a day, traders don't realize that. If a trader can average 10 points a
Order
day,
filled.
they can be an amazing, they could trade for a living. If you can make on average 10 points a day, you can definitely trade for a living. Please cover markets. Please recover markets. I don't know. I'm lost. I'm looking for maybe a pullback to buy now. Like I said, I got my live account open.
Order filled.
Yes. Thank you to Dakota. 10 points with negative risk reward.
Order filled.
Well, if you can average, remember that's average. That's what
Order filled.
It's average. If you can average over a year.
Order filled.
Hey, that's great money. That's great money. Hey, it doesn't matter if it's micros or minis. If somebody can average, if you can average 10 points a day with one micro for a year, heck yes, they're a great trader. Sure, that might be what, $20? $20 a day on average.
Order filled. Order filled.
That's better than 98% of traders. That's better than 95, whatever the statistics is. That's
Order filled.
And then you just scale up. 10 points a day on average. Two micros. 2 micros turns into $40 a day. That could be life changing for many people. If I could make an extra $40 a day, right? How much is that? I just think it really is. It doesn't seem like much on a day, but it adds up. That's great money for that. And then you continue to size up, right? And
Order filled.
Yeah, I'm averaging 10 points a day on one mini. 10 points a day is not difficult. It really is not. Averaging it over a long period of time is more difficult, but yeah, do it in a mini. You're averaging an extra $200 a day and then you size up. Yeah, now will that same person that was averaging 10 points a day on a micro, maybe in 4 years, they're trading 3 minis. 10 points a day on 3 minis, $600. And that person's making $600 a day on average for a whole year. That is trading for a living. That's good money. And then you increase your size, and then someone's trading 5 minis and they're averaging 10 points a day. And then they're making more than that's amazing. Like, just continue size. It's easy. right? Easy said than done. Easier said than done. Do you want the reality, or do you want the true the answer? How long do you think a trader should be consistently profitable before trading for a living? Do you want the hard reality, or do you just want to feel good? Do you want hope? You want hope? I would say minimum 1 year. Minimum 1 year. No sugar. Not going to sugarcoat it. It depends on your situation, but reality is minimum 1 year. Because you need to understand that you have to prove yourself through different market conditions. Different market conditions. You can be successful in these markets, but what happens if these market conditions change? You need to be exposed to different market conditions throughout the year. That's like 1 year, you still only experienced one April, you experienced one summer, you experienced one holiday through December. That's only one time that you traded during Christmas season, during December. You've only traded, that's not a lot of experience throughout 1 year. You can say there's like that, but honestly, that's why I said very, very minimum. And then it depends on your situation, right? Maybe you have zero debt. If you have zero debt and you have like very small bills and you already have supplemental income, then maybe you could become a trade for a living a lot sooner. Or if you need to replace $100,000 a year from your job to become full-time trader, then you want a lot more security. You want a lot less pressure, because how much pressure you're going to be putting on yourself as a trader. That could have been the pullback to buy. That could have been the pullback to buy. Let's see if we could break through these 317s for continuation up. Yeah, that was, now with hindsight, a pullback to buy. What's gold doing? Not much. I'm a good trader. I bought when the tweet said now is a good time to buy. Okay, this is a question. I don't like talking politics. I'm not one side or the other. I just pure markets, pure trading. But I do have to ask this question. Did he tweet after the market was up 15%? Didn't he ask like, how's the market? Or like, did he say anything after that? I know there was the message before, right, where he's like, it's a good time to buy. But was there anything after the day was over? The fact that we rallied like 15% and it was like a record-breaking day? Got to break through the 290s. Yeah, we're just consolidating here now, just under 300. Bond market said it was excellent after. He admitted he was, I'm about to size up. Yeah. He said, I saw the markets and no other president's doing that. Did he really? That used to be a crime. Top 10 record-breaking days were all in a bear market recession. Yes, it was. That would look like he told people to buy. So we go with Trump. This volatility has moved money. I tell you, money is moving around these markets like it hasn't done for years. Ron, I've been trading for 7 years. I started at a very young age. I am currently 23 years old and it is still not profitable to continue or retire. Ron, if you're only 23 years old and you've already have that much experience, you're well ahead of most traders. Don't get, you only fail when you give up. Look at the euro. What's the symbol for the euro? It's 6E. Dang. Look at that move. That's breaking out. That's breaking out. Oh, I haven't traded currency pairs for a very long time. Yeah, well, you're watching everything, right, Hoop? You're watching like 15, 16 different markets at a time. Yeah, that's what I was curious. If he said the markets are looking good now, did he make anything today? Did he say, yeah, the markets are looking bad? Regardless of what anybody thinks, everyone pays attention to the markets. Everybody pays attention to the markets. And when your Uber driver, when your neighbor, when your spouse or family member is talking about the markets, you know anybody in power, any political position is looking and thinking about the markets. Dakota, I read X. Japan is going to cut interest rates by noon. How's that affect the Nikkei? Let's look. Let's look. So far, the Nikkei is down 1%. We've got that nice bounce, but we are at this level of resistance here in the Nikkei, so I'm curious if this just was a bounce. Maybe we come back down to the 33,000 levels, those lower, like 33,000. Like, everything is volatile. We're going to bounce off 18K tonight, up 200 points after PPI. I mean, so far that's the low. Yeah, if it's in the, that's a great point, Kelly. That's always been the thing is there is algorithms and there's traders, there's technology that as soon as you see it in any news press, any news feed, it's already in the markets. You've already missed it, right? Like as soon as you see a headline, people's already been traded it. Like markets right now and the technology that we have in the markets, they are so efficient because everyone can trade at such high speeds. It's near impossible for someone like myself to trade it, to out trade it, unless I get the news before the world, right? The insider information, or we get a leak and you happen to be the first one to get it. Ask Citadel. Yeah, that's the reality that we live in. Like, when it comes to perfect competition, yes. Anybody with a computer can have access to high-speed internet. And look at this market pumping now. He told the whole world. Yeah, with hindsight, he told. Yeah. Yeah, the fastest way I know there's news is I watch the markets. As soon as I see these markets react, you could tell on TopStep TV, right? Where it's like, oh, tape bomb, something happened. And then after the move, you kind of see the news come out. That's how it is. You have people paying millions of dollars for direct lines, direct hookups. Ooh, there's even... Oh... Correct me if I'm wrong. Chat, I know you'll correct me if I'm wrong. There was a time through the whole technology, right, through computers coming into the markets and trading, they had to regulate how long your computer cables were connected to the exchange, right? Like your connection to the exchange had to be so long because institutions or hedge funds or
Ya son las 10 de la
whoever
noche,
had the
usted no me...
shortest wire connection was able to beat everyone else. And it's the same back. And is it 3 feet? Something like that. There was also, if we want to go really back in the time. Now, I do know before, way back, reading history, studying like all that, they used to do something similar, but not in computers, not in technology, but horses, where whoever had the faster horse to deliver the news to whoever is on trading or whatever, buying the markets, typically got the news faster. I can't remember the story, the history, something about some war, and then the war would come, like the news would travel from ships to the East Coast, and then as soon as that news got to shore, whoever had the faster horse to run it to maybe take action, and just lots of, I mean, that's always been the case, right? Whoever got information faster always had an advantage. That's always the case. Whoever gets the information first has an advantage on everybody else. Imagine riding your horse to put a buy order. Transmission speed and is crucial for many. True, but why many institutions they get the server just close to the exchange? I was even reading stories where people would buy huge towers. So the taller the tower, if you're not in like New York or somewhere, the more direct of a connection. Is that something? Is that true? You have a taller tower. I have a more direct line for a signal to get it to the exchange. I got that email from Mick today. Hopefully it's a good email. Looks like it's good. Hummingbird project. That used to be the advantage of the trading floor in Wall Street. Yeah. ASAP to fiber. I execute on the 5-second chart. Okay, this could be a setup right here. Too short. This could be another short opportunity. I'm watching this market. We're getting this consolidation here. So here's what I'm thinking. You know, is this a consolidation?
No.
Can we break the bottom of this and then make a leg lower? Is this a short opportunity? Micros. I'm going to see about building a position. One micro. I might add if we could get up to the top and show another reversal. I don't mind risking 1 micro. Oh, of course. All right. Who shorts these markets? You can wonder why I only buy this dang thing. Instantly. Let's look at the points. Instantly. Minus 30 points. Minus 30 points. An instant. Okay, I'm going to add. I'm not going to worry about points. Let's Now let's see, where's a good stop? I'm going to close this out manually. I might end up just take $100 loss or so. Well, I chose exactly when it was going to bounce. Watching. Let's see if we could add to this position. Bullish breaker upper. Let's see. I'm adding to the position. Four micros. Still feels like a lot. Bullish flag pattern. My finger's on the close button. We're hesitating right here at these 290s. There we go. Let's see if we get continuation down to the bottom of this range. We're in a position right in the middle of this freaking range, too. In 5 micros. 5 micros. Oh, I'm so used to this being minis, everybody. Mm, 6 micros. Let me see what it looks like on the 1 minute. That 5 minutes. Yeah, there's lots of consolidation right here. All right, I might wait to add. If we get down and retest and start to break, then I could add some more, maybe. Chop zone. Chop zone. Order filled. I hate that sound. Like PTSD. Oh, can you guys hear? Oh, you can't hear the order filled. Let's watch it. If we fail to break, I'm just gonna close out, and I can always reset this. I can always reset the trade back up. I'm always a firm believer. It's easier to get out and back in than to hold on and hope it turns around. I added right there. We're holding. I want to see it fail a lot quicker than that. So we might not liking this. You think it goes up? It's not looking the best. And I think you might be right. Let's see if we could hold these 310s. If we could hold below this 310 level. Yeah, yep, I'm out. I'm out. We did not hold, and now we could probably, let's see if we break to the long side. It probably could be a decent add to the long, to be honest. The fact that we held this, that was big. Do we add to this again? Can we get into it? That trade was 50-50. This is big. This, to me, meant more than anything else in this consolidation. Because now it looks like we could just break up. Just consolidation, just junk price action. I want to see if this is going to hold. I'm playing a breakout, non-biased. I'm not biased short or long right here. I want to get in with a break in either direction. If this is going to break up or down. Later, tater chips. Quit reading the chat. Watch the book. Retail trading at its finest. Okay, added 2. 3. Let's see if we get this momentum through to the upside now. We're still holding these higher lows. We'll get 4. Let's get 5. The breakthrough will add. If we could break through these 16s to 18s. 18 is going to be that high point. And I'm watching. I want to see this. I want to see these lows continue to hold. Right? Pivot. Here's another pivot. And if it breaks, I'm out. Looking good. We're long America. Being long in this market. Oh no. I don't know about that. Why am I long in a bear market? Bear market. Bear flag, bull flag. Consolidating. Consolidating. Consolidation is what we are. What we are in. There goes dinner. There goes dinner. Sell the ups. We're supposed to buy. Maybe I got this wrong, everybody. I didn't know. You're supposed to buy the bottom and sell the top? Or do we buy the top or sell the bottom? Breakout trading. Both? Both? It'll break up. In range bounds mainly fell. Let's see. We got to look at this. We got to look at this. Where are we at? Tilt's long. The tilt's long. I don't know if I like that though. I don't know if I like the tilt. The fact that the tilt is long. We're still holding these. We're still holding this support. So that's what I'm watching. It seems like this range is getting tighter and tighter. Breakout trades. Fade it. Fade what, Dying Voice? Fade the market? Oh, this chop, man. This chop. This market. Oh, we're at the bottom of this. Wait for it. Wait for it. All right. All right. All right. Let's go. I added long 6. Let's get follow through now. We got to get this follow through. Maybe. Can we see some follow through? Or is this going to fake out? This is where it makes me a little bit nervous. Is it going to have follow through or a fake out here? Can we get follow through? Those 300s? Maybe? Chat, where are we looking? Where are we looking? Looking for these 360s. All right, in the 40s. Okay, so far so good. Can we get follow through in the 40s? See if we get those 60s. Might close out a couple if we get another push higher. Volatility starting to see volatility picking up a little bit. Let's get pushing through those 50s. I want to see 60s come in. Come on. Don't stop. Let's get through. Let's get through it. We're trying. Trying. Okay, let's get out of one there. Let's get at 50s, mid 50s.
Me dejó con las ganas. Me dejó con las ganas.
Oh, is it really gonna let me get out of one and then
Me
turn
dejó
around on
con
me?
las ganas.
All right, let's tighten this. Let's tighten this before we get smacked by some tweet.
Que sol is back. Sol is back again.
You gotta be freaking kidding me. Come on. Take the money and run. I closed out of one. I should have closed out of half. But let's see if we can get a pull
Order
back and
filled.
continuation back up. I wanted to see these 60s. We got 58. I think we could come back and test these 60s again. We got to find a higher low. You should have done minis. Shoulda, woulda, coulda. Sweep. Move your stop a bit. Are we going to get any follow through from this pullback? Are we going to sell right back in? And this is going to be a scratch? Wait for the trade. I hear everybody now. If this turns out to be scratch, should have took profit. Yeah, what's casual not realizing? Let's think about volatility. I was up 50 points on that one. Not even feeling like that. That didn't even feel like 50 points, everybody. That felt like 12 points. That felt like maybe 20, not 50. That's a 50-point banger right there. Not really thinking about the points move. Like, up 50 points on that one did not feel anything like 50 points. That seems like it's 10 points. Let's get back up to these 60s, and let's get a continuation and a breakout. Touch 50 once. I'm getting used to this movement. We're getting jaded. Good flip here. Do the reversal challenge. Testing 50. Back into these 60s. Come on, market. That's a little more. Don't stop. Okay, I'm going to close off another one at 50. Now I'm long 4. Securing some profit. As you check out, I was taking a pull to log off. Oh, we're addicted to this market. All right, just 50 points here. Into the 60s. Let's close out another one and see if we get 61. Chat. Okay, into those 60s again. I'm going to close another one off there. Not going to get lock in some more profits. We'll tighten this up. Just a casual 50 points in slow markets twice. All right, let's see. Maybe we could come up and see these 80s. Maybe we could see these 80s. Next zone. This is that first zone I was looking at that we are now seeing as resistance. Why not sell them all? I would not be following my process if I would just be selling them all. I've locked in 340. I was down 50 bucks. I was up 200, then down 50. You don't. If we could break through this, I'm seeing these 80s come into play.